Welcome back. Today we're conducting a comprehensive 15-minute deep dive into Uber's latest results, starting with real-time market performance. Before we start, please like this video and subscribe. Now let's look at the market. We begin with the current market snapshot, where Uber's stock ticker UBER is reflecting significant investor sentiment following this report. The stock recently closed at $73.89, marking a modest daily decline of 1.92% amidst broader market volatility. As a major NASDAQ-listed technology leader, Uber's daily price action is closely watched by both institutional and retail investors globally. Trading volume remains robust, showing high liquidity and active participation from the market as participants digest the latest financial data. The 52-week range highlights the significant capital appreciation shareholders have enjoyed, even with recent pullbacks in the tech sector. Uber's performance relative to the broader S&P 500 confirms its status as a key momentum driver in the transportation category. Analyst consensus remains largely bullish, viewing recent price levels as a potential entry point for long-term growth-oriented portfolios. After-hours trading activity suggests that the market is still finding a stable equilibrium following the detailed earnings release. With a market capitalization in the hundreds of billions, Uber is now a mature player with deep institutional ownership. Overall, the market snapshot confirms that investor interest in Uber's platform remains at all-time highs despite short-term fluctuations. Moving to valuation, the price-to-earnings and price-to-sales ratios provide a clear window into how the equity markets value Uber. The trailing price-to-earnings ratio recently stood at 1730, suggesting that the stock is priced attractively relative to historical multiples. This multiple reflects a company that has successfully navigated the transition from a high-growth cash burner to a sustainable technology giant. The price-to-sales ratio of 3.31 further confirms this efficiency, showing that investors are paying a fair premium for revenue. This represents the market's willingness to reward each dollar of revenue generated across Uber's massive and diverse global operations network. Looking at the trend since Q4 2024, we see a period of stability with multiples reflecting confidence in management. This consistency is a hallmark of a mature technology player that has earned the trust of large-cap institutional funds. Compared to historical levels, these ratios suggest that Uber is trading at a significant discount to its peak growth years. Analysts often use these stable ratios as a key technical indicator that the stock has established a solid valuation floor. Overall, these metrics confirm a company with strong fundamental earnings power that is well supported by current public market pricing. Financial health is our next focus, examining the balance between total debt levels and the company's robust liquidity position. Total debt at the end of Q4 2025 stood at $1,230 billion, a significant but strategically managed figure. This leverage allows for continued investment in R&D and geographic expansion while maintaining a healthy and disciplined corporate capital structure. However, this debt is well covered by Uber's massive cash reserves and its consistent free cash flow generation every quarter. Cash and equivalents reached a healthy $7.74 billion, providing a substantial war chest for potential future strategic acquisitions. The free cash flow for the quarter was a solid $2.81 billion, reinforcing the company's ability to fund operations. Looking at the trend from Q4 2024, we see that liquidity has remained consistently high across all reporting periods. The ratio of debt to cash and the strong free cash flow yield suggest a company with extremely high solvency. For institutional credit analysts, this balance sheet is a primary signal of sustainability and a core reason for rating improvements. In summary, the debt and liquidity data confirms a fortress-like financial position that supports Uber's long-term expansion goals worldwide. The P&L breakdown over recent quarters reveals the underlying mechanics of Uber's operating income and net profitability as a business. Total revenue for the last quarter was $14.37 billion, representing a healthy 6.68% increase compared to the previous quarter. Gross profit reached $4.75 billion, demonstrating the powerful network effects and pricing efficiency of Uber's diversified platform across global markets. Operating income stood at $1.85 billion, a significant milestone that proves the scalability of the company's core technology and logistics. Pre-tax income for the period was reported at $291 million, reflecting disciplined expense management and optimized global operational structures. Net income for the final quarter reached $296 million, further solidifying the company's clear and consistent path toward GAAP profitability. Looking at the visual trend, we see undeniable evidence of operating leverage, with profit growing faster than revenue in several key segments. The relationship between total revenue and gross profit indicates that Uber is successfully managing its cost of revenue despite inflationary pressures. This bottom-line growth is a direct result of the scalability of Uber's tech stack, which supports millions of daily active users. In summary, the P&L statement shows a highly efficient technology leader that is now delivering significant profits alongside its massive scale. Turning to the balance sheet, the comparison of total assets versus total liabilities shows a company that is growing structurally stronger. Total assets for Q4 2025 reached $61.80 billion, representing a massive global footprint of technology, brands, and liquid capital resources. While this is 2.43% less than in Q3, it reflects a more efficient allocation of assets and strategic debt reduction initiatives. On the other side of the ledger, total liabilities stood at $33.72 billion, showing a disciplined approach to corporate leverage. Crucially, liabilities decreased by 1.37% this quarter, continuing a positive trend of balance sheet deleveraging and improved financial stability for shareholders. The difference between these two figures represents a substantial equity base, providing a significant cushion for the company's future growth and expansion. Looking across 2024 and 2025, the balance sheet exhibits a high degree of stability and a clearly improving net asset position. The quality of these assets, including significant cash and intellectual property, ensures that Uber remains a resilient player in the logistics sector. The healthy ratio of assets to liabilities confirms Uber's ability to comfortably service its obligations while funding its multi-year innovation roadmap. In summary, Uber's financial position is the strongest it has ever been, providing the bedrock for its long-term market dominance and stability. The operating, investing, and financing cash flows chart illustrates how capital moves through Uber's vast and growing global ecosystem. In Q4 2025, cash from operating activities reached $2.88 billion, a strong result that highlights the company's profitability. For the full fiscal year 2025, operating cash flow was reported at a robust $10.10 billion, reflecting significant growth. Cash linked to investing activities was negative $1.72 billion, as Uber continues to strategically reinvest in its platform. Financing activities saw an outflow of $3.001 billion, primarily used for debt management and opportunistic return of capital. Free cash flow for the quarter stood at $2.81 billion, while the full year total reached $9.76 billion. This high level of free cash flow confirms Uber's efficient cash conversion cycle and its ability to fund internal growth. Comparing the quarters of 2024 and 2025, we see a consistent and accelerating trend in operating cash flow generation. This self-sustaining financial model is a major competitive advantage, allowing Uber to lead the market without needing external capital. In summary, the cash flow data confirms that Uber is now a mature, cash-generating giant with immense financial flexibility. Diving deeper into efficiency, the price-to-sales and EV to EBITDA ratios allow us to benchmark Uber's scale against industry peers. The price-to-sales ratio currently stands at 3.05, representing a fair valuation for a high-growth platform with diversified revenue. The enterprise value to EBITDA ratio of 22.68 further highlights Uber's strong operational profitability relative to its total value. The price-to-earnings ratio recently stood at 1730, confirming that the stock is priced reasonably for its current earnings trajectory. The price-to-cash flow ratio of 17.04 indicates that the market is valuing Uber's actual cash generation power very highly. As of 2025, the company employed approximately 34,000 people globally to manage its vast technology and logistics infrastructure. These ratios, when compared across the quarters of 2024 and 2025, show a clear trend of improving operational efficiency. The stability of these metrics justifies the market's willingness to reward Uber with a premium valuation in the tech sector. For many institutional investors, these balanced ratios indicate a company that offers both defensive stability and aggressive growth potential. In summary, the key financial ratios confirm that Uber is operating at a best-in-class level of efficiency and scale. Earnings per share data provides a crucial look at Uber's underlying profitability on a per-share basis for all public investors. In the last quarter, the company reported $0.71 per share, which missed the $0.79 estimate by 9.81%. This miss comes after several quarters of outperformance, reflecting a period of higher investment and shifting global cost structures. Looking forward to Q1 2026, analysts have set a conservative EPS estimate of $0.69 per share for Uber. This earnings target is supported by a forecasted revenue of $13.32 billion as the company enters its next cycle. Examining the trend bars for 2025, we see a company that is consistently delivering profits, albeit with quarterly fluctuations. The transition to a multi-quarter streak of positive EPS is a historic milestone for Uber's long-term business model maturity. Despite the recent miss, the broader trend indicates that Uber is successfully leveraging its scale to drive bottom-line value. Analysts remain focused on the long-term earnings trajectory rather than short-term misses, providing a solid floor for the stock. In summary, the EPS snapshot confirms a business that has firmly established itself as a profitable leader in technology. The quarterly revenue chart showcases a consistent trend of Uber meeting and exceeding Wall Street's demanding top-line growth expectations. In Q4 2025, reported revenue reached $14.37 billion, successfully beating the analyst estimate of $14.32 billion. Looking back at 2024, the company maintained a strong streak of positive surprises, including beats of over 1.7%. A brief negative surprise of 0.84% occurred in Q1 2025, but was quickly corrected in subsequent reporting periods. The year-over-year revenue expansion from $10.13 billion in early 2024 to over $14 billion today is truly remarkable scaling. This high degree of predictability in revenue growth is a primary reason for Uber's inclusion in large-cap growth portfolios globally. Estimates for 2026 show continued optimism, with quarterly targets set to climb toward the $15.78 billion mark. The momentum entering the next fiscal year is supported by strong demand across both ride-hailing and food delivery platforms. Management's ability to provide accurate and conservative guidance continues to be a hallmark of their relationship with the market. Overall, the revenue surprise data reinforces Uber's status as a reliable top-line performer with a clear path for expansion. Finally, we analyze the performance of mobility, delivery, and freight segments, which serve as the primary pillars of Uber's ecosystem. Last year, the company generated a record $52.02 billion in total revenue across its diversified global operations network. The top-performing segment remains mobility, which contributed a massive $29.67 billion, representing significant year-over-year scaling. The delivery segment also showed impressive results, bringing in $17.25 billion as consumer habits continue to favor on-demand services. Freight contributed $5.10 billion, while ATG and other technology programs continue to represent Uber's long-term bets on innovation. Regional performance was anchored by the United States, which accounted for $23.77 billion of the total revenue last year. This domestic strength is complemented by a growing international footprint where Uber is capturing market share in key emerging territories. Comparing these results to the previous year's $25.09 billion in mobility, we see a company that is accelerating its core drivers. The synergy between mobility and delivery creates a powerful flywheel effect, driving higher user engagement and lowering customer acquisition costs. Overall, the segment data reinforces Uber's position as an indispensable platform for global transportation, commerce, and advanced logistics technology. In summary, Uber's Q4 2025 results reinforce its status as a premier global leader. The data shows exceptional consistency, growth, and structural profitability. Thank you for joining this exhaustive deep dive analysis. Please share your thoughts below, like the video, and subscribe for more. See you next time.